everybody, and welcome to the Close Show. Welcome to, of course, the discussion about what we've got right now, which is a fairly red day. Crypto alts getting hit, Bitcoin doing okay, actually, surprisingly well. Same with Ethereum, and then the rest of the market is down. So we'll be covering off on stocks and indices and commodities coming into the close, and then we'll talk about our thoughts on crypto. Obviously, a massive welcome to everyone. Hopefully, you positioned okay for that. We got our gap filled to the downside, which I guess we partially suspected may happen. And it looks like we may be looking at a potential even sell into the next week of information. So let's just have a quick look ahead here. Obviously, CPI information's come out. Let me refresh this particular computer with the information here. So we've got here 0.6%, obviously annualized. I think it was like 7.5 or something like that. Biggest in 40 years, I believe, in terms of inflation numbers. And if we scroll through, we now then move into next week and we go Tuesday 15th PPI information, and then we scroll down even more. And I think what's going to probably happen here is we're probably going to go into a bit of a discussion about the Fed and the FOMC meeting minutes. So this is probably the big bit of news now that everyone will look for. And I would say that most people are starting to think that the Fed is underprepared for the next movement. Let's just quickly look at some of the stats. The stats have moved from 0.25, which was obviously already at a 99% chance of, let's say, being done in March, to now it's a 1 in 2 chance for a 0.5%. And I would say it's higher than that. The way I would do it is I would always go with, it's very, 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 very likely that when you're talking about raising rates, if I was the Fed, I would put a 0.5 on the market. And you've got to think about it. If you go hard and you go kind of that fast speed, maybe you don't have to do as many raisings. And I think that's the big thing for the Fed. They don't really want to get back. You know, TLT here, bonds obviously reacting down. 10-year, this is the big story, above 2%. Now, a lot of pundits, a lot of people I know, fund managers, everyone's aware of this 1.96 previous peak to 1.98 previous peak. What do you think about this, chat? You worried about this one? This is the real signal to me that, okay, this might actually jump a little bit more. And while it jumps a little bit more, and I don't think the real rate's here, by the way. The real rate is most likely probably more around 1.5 to 2 in terms of where they're going to get it to. Look at that rate jump to 203, and the 2-year now sits at 1.6. Wow. So it's even overshot what I thought it might do. I thought it would get to about 1.5. It's sitting at 1.6. So they're basically saying 2 years, 1.6, 10 years, 2. Wowzers. People are saying going to 3. Going to 3. US 10-year 2% is a big deal, and the 2-year raising so much faster. One more Fed comment. It's going to invert. Overdone. Use 2-year Treasury 1.6. 1.6. That's right. 2 years up to 1.6. Yeah, this is a huge movement. 18% here on the day. So we thought always 1.5 was quite possible just based on the flag kind of analysis. But yeah, it's getting pretty significant. So we move back into that concept of what happened in 17 into 18 into the end of 18. And then all of a sudden, of course, we saw drops of rates. Now, what did this do to the market? So we had a midterm. It's kind of like there's a lot of parallels to be drawn there. So we expect the turnaround. That's fair enough. We had a fairly decent raise in rates, but at this point we actually had a stronger economy in some ways. I think the problem is we've got kind of a sugar rushed economy in some over here, and obviously the market's a little bit higher. So the way that most people do the calculation is that 1% rate takes about 10% off the market. So if you did that calculation and you said, okay, 1.6% rate, then we should be taking 16% off the market, which obviously we haven't done on the SPY. So it's going to be continuation here of very significant volatility If you're trading the VIX into the CPI news, well done. I guess you've done well there. That thing's jumped up to 24, could go higher. But let's go back over to the markets. Let's actually look at the real markets as well. So we'll start off here with the NDX, I guess. And let's have a think about the weekly if it closes like this. Now, if we get another bearish day, this is significant, okay? We've got a bearish candle and we've got a bearish candle. And imagine if we close near the lows, like a tweezer revert, like basically literally a pickup to 2 rejections after tests and a pressure being put on this level. It would make sense to the options market as well, remember, because the SPY would be around the right price to not pay off much. So this would be huge. I mean, we haven't seen something like this since over here. And in this case, what happened was it went bullish because, of course, it closed above those wicks. So, and then you can see that what ends up happening. So this is significant. I mean, I can't think of, there's one of the last times we got rejections like that. Can I even go back and find something? I mean, this was kind of like similar at the start. I don't even think I've got one like this. I know what it means, but it doesn't mean good things. What about back in the bust? No, not even there. All right. Well, it would be pretty rare. Obviously, in any trader's textbook, this would be pretty significant. And a follow through below that would be incredibly significant, like back down to the 14,000, if not 13,750, if that occurred. So, yeah, this is big deal. And this is the Nasdaq. Let's have a look now at the actual daily movement. So we can check here, big daily rejection candle. It's very clear where the bulls and the bears fight it out now. I mean, we've got bear fights all over this 14,500. If the bulls get it above here, we have to be convinced to buy up. There's just no way we wouldn't be buying at that point. Now, there's not much reasons why we would want to be buying. Everything's negative, but price action would dictate that if you got above this and closed at this stage, or even above this one, you'd be scaling into the bull side. You'd have to consider that because it would basically be saying it's shrugging off everything it's done today. Now, I don't know if it can or not. We don't know that. I would say it's bad, but we don't know yet. So, yeah. It's going to be interesting from that point. Is the video out of focus? Should be fine. Everybody got fine, so like, you know, everything looking okay on your video, or is it a bit blurry? Should be all right. Should be okay. All right, so big bearish candle, closure is going to be negative. If it does close like that, look for the follow through trade tomorrow. We're looking towards that 14,500, might even happen after hours. If that does end up occurring, then we move towards this being the bounce, if it's going to be a bounce for the bulls. And underneath here is incredibly clear zone of weakness. Let's have a look at the 2 hour. We want to break it down through the time frames. Obviously, we practice the kind of idea of multi-time frame analysis. So we've got 750 people here. Thank you so much. Smash that like button if you enjoy our content. Obviously, subscribe as well. We always do these closes 4 days a week. So we always want to go through as much as we can with the markets. So yeah, weakness into here is probably what we expect now. If we close underneath here, get ready for some mighty shorting because that's the significant closure that we're looking at. I think everybody on the market knows that. Algorithms will know that. Doesn't mean we're going to go there. Let's not speculate on what exactly this whole inflation number really means. I mean, you can, if you have like a longer term conviction, you might say, oh, I think it's going down 20% now. And I think the SPY is going all the way to 380. And you might be correct. Well done if you are. But the thing with shorting is it's wild and fast. Hopefully you've seen that over here with dead cat bounces and big movements up and all sorts of things. So generally speaking, if you can, you like to kind of take snippet trades where you take portions of the short, and then as it closes below, you get in with a stop loss, with an entry, and with the take profit. And that goes for the longs as well, unless you're investing at specific areas, e.g. the 50 EMA, which we love very much on the SPY. So these kind of levels, that's how you really want to trade around them. We've got Pradeep C19 Singapore $5 with the big brain. Thank you very much, Pradeep. Appreciate that, man. I like the big brain emoji. And we'll leave you up there for comments for a second. So let's move over to the SPY and see whether the major index is giving us a similar kind of concept. It's important they kind of line up as much as possible. So we've got that 445. Now, we still expect there to be some problems with options still. So even with this result that's pushing it down, you got to remember, what did the market do? It gave itself padding. So it got up to the resistance, it sold off that resistance, and there were tons of puts sitting all the way under here. Okay, so where are all the puts expiring for Friday? They're sitting right around that 445. Now, that's not a guarantee it sits at 445. It's not a guarantee of anything. You know, that 440, 445, those areas were where the puts were. So it kind of makes sense to me that we finish the session, maybe even tomorrow if we keep selling off, maybe around here, giving us, I guess, not enough clarity to really be able to say, okay, yes, it's going all the way back down to the 400 or the 420 or the 430, and that's going to be the main issue. Think about also if we break below this zone, many people will call that, of course, a little double top within the trend itself. And that's super important. So when we go back over to the daily and you consider these things, big rejection candle here, very bearish. If we close below, especially with these gaps, unfortunately, it's not really an island. A lot of people are saying it's an island. The idea of an island would be that you have like price action, then it gaps up, then it creates like a little level, and then it gaps down, and then, of course, continues to short. That's like an island. Because you want your island usually wants to be more than one candle in size. Otherwise you'd be like that guy in Castaway and you'd die. Except you would, because you wouldn't have any water. The island would be too small to have any water. Yeah, so this break below would be incredibly significant. We love patterns within pullbacks. So they're very significant types of trades. Again, SPY still looking towards that negative side. But if you're going to be a bull, I mean, you have the clear level, just like the Nasdaq. This is a clear level now. It's so much easier. The clarity is much easier in the markets from that action. All right. Panic is not a strategy. That is correct, Andrew Sir. Thank you very much as well for the $5 donation before. You can't be panicking during these times. You have to always be prepared. And look, a lot of the time people ask me, oh, do you go all cash? Do you do all those types of things? No, not for me. The way that you kind of need to look at it is you've got your kind of medium to long term, which I'm still bullish on, even though it seems, you know, a lot of people would probably be saying, oh, you're insane, this could be a crash or whatever. And you always have your portion portfolio, you know, long. You might scale back during certain portions, which is totally fine, but you generally stay invested in your high conviction stocks. And then what you do is you have a cash component, a hedged component, whatever it might be, that allows you to reinvest into that bigger investment. Now, some people might say, oh, I'm going to time the market. You stupid. I sell over here and I buy back over here. And look, well done if you've done that this one time around, but it is difficult. Then you've got your trading accounts. And when you do your trading accounts, it's totally different. I mean, your trading accounts are nimble, fast, VIX above 20, day trade, scalp, have a plan. And remember, anyone that's trading out there, if you have an entry, if you have a take profit, and you have a stop loss, then you're trading. If you have an entry and you have a take profit and you have no stop loss, then you're probably more likely kind of investing in levels. And that's okay, but the problem then is that you're not really risk managing as much. So let's talk about hyper stocks, Tesla, everything else. We'll go through some hyper stocks here. So you'll notice actually it's links like Apple getting hit today, 2.54% down, 171.80. It's coming back down here. This also significant because look, Apple precursor a little bit here, went bullish, very hard bullish after the earnings. And now all of a sudden we have another chance of a little double top here in the pullback that's been quite significant. So watch that one. Price here is around 170 for Apple. So we'll be looking at the calls and options maybe in today's video. You've got things like Amazon still hovering around this stupid zone. Again, rejection, interesting candle. Probably took a lot of people's shorts out here. And it's been a lot of manipulation on that, I think. So I'm not a huge fan of what I'm saying. But think about all these stocks. Now, obviously, hyper stocks have got hit, but they haven't got hit as much as they would have usually. And I think that's due to the returns being a lot better. We obviously saw Twilio with a good result. Now, it's just given up everything that it put on. Let's think about this. If you're a fundamental analyst and you're looking at it and you're saying, okay, I love these stocks. These stocks are growing. They're good. They should be giving good results. And then they give back this much. Now, I don't know about this particular one, but if they are particularly doing this, what does, the next little bit of the index, once you're reading the index, because remember, everything comes from index. Oh, I don't know why that happened. 1 second. Let me fix this. Everything comes from the index. When VIX goes above 20, I've said this so many times, stop looking at stocks particularly and start looking at the damn index, because the index is going to show you your buys for all of your favorite stocks anyway, because it's going to be showing you the turnaround. And then you have your 10, 20, 30 stocks that you've got and you're following. You can still look at them, but in general, you watch the index to see the turnaround. That's what we want to be doing. And in this case, the reason I bring that up is because you're going to see discrepancies of great companies with great earnings. Remember, Warren Buffett says it's better to buy a great stock at a good price than a great price with a good stock. And I agree with him on that. And why I get at this is, I'm not saying that Twilio is bad. I'm not, absolutely not. But if you have great fundamentals and you believe in those growth curves and everything, imagine the payoff when you're buying this thing in the dip based on your strong convictions. And at the same time, the fundamentals have been holding up. There's a difference between a company that's going badly during these times and a company that's getting thrashed because the rest of the market is. And when you start to think about the fundamentals coming into your technical analysis, coming into your investment, and the growth that you're continuing to see in your earnings per share and whatever else statistic, price sales ratio, whatever you want to look at, then yeah, you can do much, much better. So that's an interesting one. Now, let's just have a look at some of my favorite sectors. Somebody said that Net's doing okay still. Yeah, look, Net and ZS are probably the two best in that space. And you can tell also the market wanted to buy these up. But again, it doesn't matter what they think, what this market's doing. It could hold itself against the index. But most likely, if the Nasdaq falls through, what will happen to this stock? This stock will also fall with it. And it will give you a price opportunity with your conviction in fundamentals and technical analysis levels to get better price. So it goes VIX above 20, index, 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 index all day. I don't know if you guys agree. Let's see if you do. Does everyone agree with that idea, or do you disagree? That's fine as well. What do you think? Atticus F says, Twilio, good short. Well, it certainly went down. I find it hard to make those types of shorts, but if you're strong on the fundamentals, you may be able to. It's a tough one. Twilio killed me, FOMO, and got bit. I'm sorry to hear that, Chris Maple. I'm sorry to hear that. Eugene says, Ty Tom, like your episodes, and very likely says, I agree. So does Edwin. So does Monica. Well, thank you very much. Appreciate that. And Andrew also says 100% agree. Yeah, I think it's just like a different way of thinking about it. What's the major signal at this point? It's not really fundamentals. It's not really like anything else. This is a algorithm driven market. And when we understand that algorithms control flow to a big degree, I mean, it's a huge part of trade. If we break underneath a price action level, the algos get free reign to steal money from people up to an easy level, e.g. here. And until the algos turn around and they say, whoa, wait a second, maybe we oversold something, they'll be making plenty of mismatched price errors in many stocks because they just start slamming stocks. And that's why sometimes you see like a stock that's good quality and you think, is this insane? And it goes down so hard. And then it rebounds massively the next day in comparison to other stocks because actually the algo's oversold it. It just gets this smashing on it. And if you can start to do that and get conviction in your fundamentals and know your growth is there, remember, it's about the growth stock that's big. So we've got 6 minutes. I know we're talking about just wild kind of concepts here, but I'm trying to get everyone prepared for what might actually be a bit of a sell-off here. I mean, we just got to remember today doesn't necessarily mean the market's cooked and it's going to kill itself and it's going all the way down. But at some point, we're going to, fairly soon, we're going to find out whether we've just put in a little double top. And I don't think that's a very strong signal towards the market for the next couple of weeks, if not a little bit more. And that's where, you start to get concerned. Remember, the stats still point to this. Well, let's look at some of the stats that are important. Stat 1 is, let's open up Discord quickly so I can get something else I need. But stat 1 is we've got a huge beat rate still. So the fundamentals in general for now, and even the guidance has been relatively good. So it's not really a question of whether the companies are growing. It's a question of how much should we wipe off the indices to get to our next level. So how much are we going to take off indices because of the interest rate hikes longer term? And remember, it's about that 1% interest rate equals 10% on the market, and the market will destroy that level. Now, 2018 will be the big test. As we mentioned, it's the big one. I'm not sure if this will actually load. Probably won't. There we go. So we'll need to look at that. Coming into the close, let's talk about this little rebound that we're seeing here. So it's come down, it's tested this low and seeing some buying. Yes, we're seeing buying by Wall Street. This doesn't mean that it's the strongest buying, but this is right where you expect them to come in if they're starting to feel a little bit bullish on their sell-off. Do you want to buy this? Probably not for most people. I mean, if you're buying this, it's up to you. The reason why they do it is we just need to go back to that 2 hour. They're just basically buying all of those closure points. Remember, where is the SP 500 closure points? Here, 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 here. So they're just buying that first initial support. They've done it a few points early, and that will mostly be probably algorithms and a few people saying, oh, maybe this is overcooked. This is where the market goes bullish in most people's minds. At this point, you're stuck in a bit of a range, and it's okay if you don't want to trade that range. If you shorted it today based on the futures or anything, congrats to you, especially considering it bounced back up and then it sold back off. It's a good day trade. But yeah, the real fight is in this boxed area here. That's where we're going to see the true level of the bulls and the bears. And that will happen over the Friday session, that we don't expect it to get dumped below it because of options, and the Monday session, which will be pretty exciting next week. We also do need to remember that there are a lot of puts for the next week as well. So we bring up the SPY. I don't think I've got it here. This is still this week, but I know for a fact there's still a huge amount there. They may let it through, but this is what, as that stake coming into this week, we've got huge amounts of really low options. They won't get paid. And then we've got this 440 level, which would be ideal to stay above until the Friday session closes. Liquidity grab, it could be, though the market's still holding relatively down. I mean, US 100 not seeing the bounce that the US 500 is seeing, a little bit bigger bounce here than the others. Dow doing better, 1.62% down, partially due to some of the older stocks in there not being affected as much by interest rates. And as we suspected, this hideous devil index, this index is seriously negative. I can't use it for signaling. I've always had problems with it. I've always traded it less than using signals. And I think even over here, I mean, many people would remember this one. We had that plan towards the bigger size. And obviously with this, it's always a trade. So you got your entry, stop loss, take profit. Ideally, we learned from that, or people have. But even this signal here, yes, it caused a few bounces, and when it did it separately to the market. But remember, the market wasn't doing anything over here. Here, you get a literal buy signal. For many people, it's above the resistance, and then it does this to you. Yeah, that's what IWM does, unfortunately. Let's have a look at Tesla coming into the close. Got 1 minute here. Negative candle for sure on this one. Another test of the 945. We're going down, it looks like, to maybe test down at this 880 level. Well, we know that's a coil. I've been talking about it for days. The thing with Tesla is it hates staying in a range like this. And when it does stay in the range, it tends to pop. And when it pops, it goes pretty crazy. So we've got a range. We've got lots of negativity through here. Anyone that's been shorting this level is probably loving themselves right now because they keep getting fairly good entry points towards the short. But yeah, we're in a trade range, and a breach of that, breach the downside, 800, you would think, breach the upside. Obviously, we talked about it, 1,000. So still in trading range, very negative daily candles. A bullish close above here would be insane because that would be taking out so many shorters. And I think that it might even go past 1,000 because it would be like a short squeeze. So if you're on the bull side, this would be a big deal. There'd be a lot of shorters now on this. And of course, underneath 880, well, yeah, then we go back to the 800 level. They're so good at panicking people out. I'm somewhat jealous. You mean the market or the algorithms or just people in general? Yeah, this is not a time to be freaking out. You know, if you don't have a plan for this and you're not prepared to hold your portfolio or descale your portfolio or do whatever at certain points, then I guess you got to reassess the way that you trade the markets. I mean, we've got pivotal things. The US 10 years through too. That's a big deal. Everyone's going to be talking about it. We'll see whether it holds. I'd say it probably does. US 2 years 1.62, just to recap here. Big deal. Hitting up growth stock and certainly putting the downward pressure. That's real. I mean, this is real. It just became a bit more serious than most people are thinking. I still don't think the Fed can get there. And I think the market's getting carried away in excess to a degree, but we'll find out what happens on the 16th. Now, every bit of news matters. You know how like usually news doesn't matter. And I always say, oh, whatever, who cares about PPI? Who cares about CPI at the moment? And we didn't need to care for a long time. But now each one of these news events is going to create incredible volatility in the market because we're trying to stack in our favor. How many positives are there and how many negatives are there? And at the moment, the negatives are stacking. And where's our positives? It's basically like jobs, but that's also kind of like, well, you know, maybe the economy's a little bit cooked. It's still a negative. So that's not ideal. Markets have closed. We ended up getting down around 2% on the S&P and about 2.4% on the NAS. Every one of these stocks is immaterial really to what's happening on the major index. So what I'm saying is we don't need to necessarily focus on each one of these stocks. Though if you are a big fan of certain earnings results, I mean, let's say you loved your Twilio and you thought that was a great return, regardless, it's going to move with the Nasdaq. But I mean, there's possibility and an opportunity here if you understand those fundamentals. I don't for that stock. Some of my favorite sectors being these two here, or these three. The cybersecurity style stocks are doing okay. They're still holding up pretty nicely. But yeah, everything else here, all these drops across the board, it's really just pretty much the market doing its thing, and these are all moving in flow with it. Hyperstock's getting beaten more, but the big ones that will come under the most fire through this interest rate actually could be the big blue chip Nasdaq stocks in terms of just pure percentages from market cap side. Google, I mean, it's going down 2.03. Remember, they've got good earnings. So if you're seeing a bargain basement price, let's say we get Google down and Google ends up being, I don't know, some ridiculous price like 2,200. We've got to remember a split's going to happen April all the way to July. You generally expect kind of, or even back into March, you expect to be potentially positive data stats wise for the market. We've got a split in June, I think. Is that right for this stock? So there could be some real opportunity here as well for the post if we get the right prices. Profit taking from shorts, I would say that's correct into the end of the day. Most likely shorters coming into the CPI going, you know what, I've done a great day, going to profit take, that splits. That's why the market goes up. And now after hours, it'll be allowed to do its own thing. So we'll take a couple of questions here. If you have questions, put them in the room. We'll see what everyone has. Finken79, SEC putting up T+1 rule for comments. Not sure if it was already covered. Nope. I haven't really covered that, Finken. I saw also in, not to get too political, but I noticed that they're trying to kind of partially ban being able to trade. I'm still surprised that's allowed in America. That's crazy. VIX up 20%, 4 points. That's right. Dealer hedging could be. Morning Dew says, at FX Evolution, do you think the markets are priced in the rate hikes yet? Probably not. Generally, markets price in around 75% of, in my opinion anyway, they often price in around 50 to 75% of what you're kind of seeing. And then the reality is often that bit that pushes it over and then sends the algos into out of control. And what I mean by that is when you think about it, we just saw the 2-year go to 1.6, up 18.78%. If we even just do the equation, that really should be, what's that, 0.255. So that should knock around the S&P more than 2%. Plus, on top of that, it should be probably back down at the close to the lows that it was. So it's not priced in fully. You can tell it's not priced in fully. They continue to be optimistic and wait for the next bit of information. That's the big one. They continue to wait for this optimism. There's a lot of optimism in the market still, and a lot of probably lack of risk being taken. Everyone's like, it'll be fine. Buy the dip, or buy the F and dip, I guess they say. And it's all good and it's all great. And the economy's great and everything's great and it'll be okay. Because you get conditioned to this idea of, okay, it'll come back later. The problem with like a 2018 year and a 2022 year is the most likely scenario of this year is something like this. And then like that. And what is that? That is a trader's year. Is that a good year for the US market? No. Is it a good year for investors? Probably not. Will it be a good time later on? Stats would say yes. At the end, in the fourth quarter, coming into quarter one of 2023, it could be amazing if we get the right timing. And there could be amazing investment opportunities this year that we won't see for quite a few years. But this is a trader's year. And this is an expectation of kind of what you might see. I mean, maybe it goes lower and it hits the 20% and then starts bouncing. We don't know. But if it was like 2018, basically 2018 did this. And then it was all good. So that's kind of like the 2018 year. So actually it was a big pullback in the markets. It's a good question. We've got another question coming in here. I'll just quickly bring it up. Matthew Harris, Australian $5. Thank you very much, Matthew. LYC on the ASX. This setup probably won't work because the market is tanking. It may affect it. Yep. Right now, but would this be a strong setup after one more green day? So, Matthew, I think you bring up a good point. Remember, we talk about index trades as much as possible. When the market is doing its little dance over here, you can go in and individually find stocks and basically, when it's above that 20 moving average on the weekly, you can go and find stocks and most of your trades will actually work. When the market's in a state of flux, which it is when it's underneath its mean, which is the 20, moving average, or in our case, the 20 EMA on the weekly, then we don't want to necessarily do as much setting up unless we're seeing a whole sector go. So let's have a look here at LYC. I know many Americans won't like this stock because it's Australian, but it's a Linus rare earth stock. And the setup is correct, what you've done. So basically you've said you've got your double bottom. And I like a lot of things about this. I like the wick purchasing here. I obviously love this V-shaped back end. You've got the Eve, Adam double bottom, which basically just means we've got this concept of a bit more well thought out over here. And then we've got a big giant liquidity spike to the bull side. Now, LYC could do okay. because even though the rest of the market will come down, we may continue to see a hyper movement in metals and things like that. So yeah, the idea would be like this. And you have to be taking it day by day and looking for turnaround stories here around that 920. So it's a good question. It's a good question. It's actually a very good base. And it's one of those ones that technically you are correct on. Now, some people say, well, this could be head and shoulders. Could be. But what have I always said about the short side on this? Never try to short that full head and shoulders. It's very rare to be able to work that out. And really, we're only talking about it from here. And like any good trade, you would want a stop loss criteria, entry criteria, and a take profit criteria. Thank you for the donation, and hopefully that helps. So broad market still kind of, floating around. Aftermarket slight pickups here. Let's move over to the crypto market. And this is where things get interesting. So the crypto market, it started again. It's long leg doji. We hit the 46 round again. We've sold off that level. Long leg doji, little indecision, like again a doji inside of the candle. Then we've got another long leg doji. And it becomes, of course, the discussion of, we know we're trapped in a range on the smaller time frames. Do we go bearish or do we go bullish? And that is actually a question mark. And I don't care what crypto you're in. This is the one we need to be watching right now. It's so important. You breach above, it's possible. It could do so even into these rates. Obviously, some people claim that this is inflation hedge and all these other things. It hasn't so far worked out that way. And if you breach that zone, the bulls are back. Absolutely. And it could be pretty damn good. It could be a totally separated market from the stock market. But if we breach underneath, unfortunately for Bitcoin, it's very quickly going to probably sell off back into that 41, 40K. Anyone got any different opinions on this? I just think it's pretty obvious that it's trapped in a bit of a range and that a breach above 46 is a huge deal. And we've said that now for 3-4 days since we've been up here. Love Kumar, Canadian $10. Thank you so much, man. PCC at 0.75, markets at resistance. Negative news on CPP front. Stars were aligned today for this dip. I am a member of your private community too. Thank you. Thank you, man. Can you suggest how to see PCC for individual stocks? Wow, would you want to do that? That's the question. I mean, put call ratio is just put call ratio. I mean, you could just go and look at Yahoo options for the week or the month or the third week or whatever you want to do. And you could just literally count them up. What's the open interest? How much is there? Puts versus calls. You could also just use the robot in the room. Again, the reason why we only use the idea of maybe put call walls is you would look at the options there. But I'll tell you this. In general, while some people often use options on every market, which is totally fine, it shows you a bit of flow and there are reasons for it. In general, I don't think that you'll statistically have that bigger advantage on looking at options on individual stocks as much. It'll only become part of your overall trade. So your price action is still going to be a huge component. Your fundamentals is going to be a huge component. Your data is going to be a huge component. But the options, unless you're looking at specific kind of, squeeze scenarios and other things, may only make up, let's say, less than 5% of your overall trade. So I think at the beginning, master this one, which is going to be your biggest component. Master your supply demand dynamics, your support resistance, then obviously your data, your seasonality, and your fundamentals, and being able to read the index as well, understand where it's at, and then make better informed stock decisions as well on your individual stocks. Just make sure you're not going into problem lands. So yeah, Bitcoin sitting around this 45 and a bit. I saw a whole bunch of analysis coming through about participants, and I think that's an interesting stat. Maybe I'll have a look at it and see whether it holds up. And what that idea is that they really are looking at new opened accounts and participation of accounts in the crypto market. And when you see that increase, and I think this was probably a good stat for years ago, it was quite significant in showing that trend tended to hold for quite some time until it basically blew off into crescendo. It was a good way of seeing the hype and the FOMO, which then came into price. Now we've seen an increase here, but what's actually happening through Bitcoin's movement here is mostly we've got hodlers that have held in. These are the people that really believe in crypto, and the banks obviously are starting to come into this. And we've seen just a bit of an uptick here in institutional flow, and that's part of the reason why it's through. But we're not necessarily seeing as many people, many retailers come back into the markets as you would think. And I believe the real reason is NFTs. NFTs are splitting people because everyone's going to flip these things rather than investing in hodling coins. And they're taking money out of here and going back into damn NFTs. So this is actually annoying. It's pretty annoying from wanting these coins to go up so much. Will the Super Bowl pump crypto? Oh, yeah, I've always heard that scenario. No idea. Probably. I mean, if people say that because there's ads and stuff on it, I don't know. Go look at your stats around it. Go look at every other Super Bowl year and see whether it actually has done it on the date. Wouldn't know. Net moving after hours. Let's have a look here with our net. We do love the net. Up 1.78. Mark is obviously in net. I think there's been a few people that are in net, which is, fine. I mean, I love the stock. You know that. It's one of my highest conviction concepts. Cybersecurity is a high conviction concept. If you wanted to go the easiest high conviction stock out there, it's got to be Microsoft. Always. It's not really a question. It's always Microsoft at the moment. Ever since Office 365, it's got to be Microsoft because they can gouge and they get away with it. See, Netflix increases prices. Some people will stop paying for it. Microsoft increases prices on Office 365. What you going to do? What you going to do, guys? Where can you go? Oh, no. Oh, you have to buy our product? What a shame. And I think that's the big problem with Microsoft. I mean, they're so good. And I think, the big game changer for Microsoft is obviously they've bought game companies. And you think about their Office 365 subscription. And this is why you can be fairly bullish on them in the long term as well. They can up that. But then they've got Game Pass, already the best out there. Their scale allows them to make this so good value that maybe upwards of some ridiculous amount of gamers, 70 to 90% of gamers may end up purchasing Game Pass. It's very possible. It could be insane. I don't have Game Pass currently, but I'm no doubt going to buy this in the future. There's no doubt. And then all of a sudden, they've got you into another trapped product for the rest of your life. Pradeep C19, Singapore $5. Go brr. The printers go brr. They're not going brr right now. They've got a jam. The printers have got a jam. Yeah, so with the crypto market, no matter which crypto we're looking at, it all comes down to this. Levels to watch would be the supports here. So around that 43K, underneath that would be bad. Current price action is looking negative towards Bitcoin, which will put pressure on all of the alts. Just remember that. If the Nasdaq dives, traditionally that has pulled crypto back at this stage. But Bitcoin's holding up, I think, amazingly well. Resistance, you breach past this level, the bulls are back, and there'll be some good day trades through there. I think there might be an explosion, actually, if it gets through 46. So this could be $2,000 to $4,000 a move. So just remember, there's going to be significant moves here in the crypto markets. We've got great gap trades or great trading ranges, and same with the indices. I think it's an exciting time for traders and scalpers to be getting in and finding those supports and resistances. Like Adobe, they are like Adobe, Andrew, but the difference is their market is so big. And I think Adobe has problems. So there are some people that buy Photoshop. I'm one of them, all right? So what have I done? I used to have Photoshop, and I understand this is so much better, yeah, and all their other tools. What does anyone could anyone guess the business the company that I might use now? Now, I am not a graphics designer, but I still used to pay for Adobe services. Can anyone guess a program that I might have switched to? And there's a few of them out there because really this is hard and I need easy and fast. What program would a lot of people, a lot of casuals, not their core audience, potentially use? There's the answer there. Windows Movie, yeah, Windows Movie Maker. I would use that. Paint Shop Pro, not that one. No, look, for me, it's definitely this one here. So you guys got it correct. Canva is my program of choice. That's right. And Canva is an Australian company, but I didn't use it because of that reason. It's just very good. So Canva is going to improve. They've got great technology that they can continue to build off. They've got templating systems. This is stealing educational base. All the teachers, they're not photo experts. They had this. They're like, stuff that over here. Let's use this or whatever else there is. So I think Adobe has more problems than a Microsoft has. Good luck getting another Word. Good luck getting another Excel. Google tried it, didn't really. People do use Sheets, but it's just not going to be smashed. The enterprise business is never going to get caned at this stage. Are they listed? No, they're private equity only, and they're not cheap. Too much. I think Canva might have got maybe has a 40 bill valuation on it, which is Australian. That is too much. So thank you so much to the 900 people that are here. I mean, basically the story of today is have your plan. Obviously, US 10-year will be a continuation discussion, 2-year as well. And I think that still for us, and we've said this for the start, for us to be convinced that this market is really allowed to turn around, we need to see this thing stop going up. I mean, it's holding, look at the 4-hour 20 here, but check out the daily 20. It's held the daily 20 now, this entire ramp that's caused all of this pain in the markets. And this is what we call usually a little bit of expansion, like it's that excess phase where the market's getting ahead of itself. And I think what you'll find, like think about some of the stocks that have gone into these phases, and then I've yelled at everyone about them in the past. Moderna was a classic one that went into like an excess over here, and then in a few days, it basically squeezed out all the shorts and went crazy and bonkers all the way up to this price. Look at it now. All the way back down, which is exactly what you expected probably for it to do. And when it gets into these large candles, these huge large candles, there still can be more of a run, but in general, it's usually going too high, too fast, too quickly. So I think that's what's happening a little bit here with the yields. The yields are getting ahead. Continue to watch them incredibly closely. If they turn around and at the same time the market is forming base and they get underneath the 20, that will be really the proof that we need that, okay, it's stabilizing. At this stage, it is not stabilizing. US 100, watch the levels, 14,500. US 500, simple as 44.50. We close underneath that, all significant. I don't expect them to be smashed during the Friday session. I think the Monday session will be exciting, but yeah, we'll find out. Buyers, you're looking at this level tomorrow for your day trades and scalps. And yeah, it's interesting times. Be nimble, be quick, and the VIX is above 20. Is Envato Australian? Could be. I'm not too sure. AB says, I hope T-bonds will crash 80%. Ooh, I don't want anything to crash 80%. Glenn says here, Affinity is great if you want an alt with the technical depth of Photoshop. There you go. What do you think about Tesla? Do you think it's breaking downwards? JJ Princess says, what about QQQ? Well, it's the same thing. I mean, we can just use the Nasdaq because this is just the ETF of it. Yeah. For you, it's just 352. Bad candle, bearishness you would expect to come down to this level. Do we see the bounce? We don't know. And if we get underneath, 340 is the next level. So we did Tesla before. Really, the feeling on Tesla here is if you're looking at this, you would say, what's the story? Hanging man, rejection, rejection, long leg doji. If you were a day trader, you could have shorted the top, which would have been fine. Thing with shorting the top here is I don't talk about too much, but this is actually an easy short, but you've got to be prepared to lose a lot on them. Like, as in, like, they will sometimes bust you up. Where do you put your stop loss? Here. Where do you put your take profit? Probably the bottom or this middle area here where it closed today. And you basically just have a really tight stop loss because you're trading a channel, effectively. You're trading a range. You have an entry point and you have a take profit. And that's all you have. And if you get hit, don't worry about it. Move on to the next one. Don't have a fear because you're choosing how much risk to put on it. So if you shorted this today, congrats to you. There is a good short here. You shorted the top. You've read the story, and the storyline has been negative to the level, long leg doji. You get that kind of information that comes out with the CPI, and you even get a test, and then it sells. So you had every right to be able to short that with an incredibly tight stop loss, and you would have made a 10-to-1 trade. And trading is that easy, but just remember, you make a 10-to-1, but you're going to lose at least half of your trades when you start doing this, if not a little bit higher. So you kind of need those ratios. What's my opinion on NVIDIA? I love NVIDIA very much. I think it's overpriced. But you're going to ask me two different questions. One of your questions will be, is it investable at this price? If you come back in 3 years' time, yeah, you'll be up. If you come back in a year's time, you'll probably be up. Is it expensive right now by all metrics? I think so. I think this stock is traditionally held by a lot of retail. It does well off crypto. And I think you need to remember how it traded through the last crypto winter as well. And 18 as well, while interest rates were going up. Now, it did okay. It kind of stagnated all year. And then at the end of 18, it got flogged. So it kind of held those rates, but it does get flogged. When it gets hit, it gets smashed. People forget 56% in a non-crashing market, non-properly crashing market, 56%. We are now in a bubble on this to a degree that's worth $645 billion. It's at a 20 moving average on a weekly. It's at roll reversal. It's got 6 days till earnings. I don't expect earnings to be hard. But yeah, I think its ratio is now like 70 and it used to be 35. That's a big difference. Darren Jones, thank you very much, Darren. $10. Hi, Tom. Sorry I'm late. No worries, man. And sorry if you've already covered it, but what do you think the chances of QQQ closing over 365 in the future is? Oh, what future, Darren? 365, what, this week? Low. Or next week? Still low. The 16th of Feb is the problem because we have the FOMC. And markets will look towards that. And what have they got to be positive about into that? The Fed has a history of being a little bit slow to react. A lot of people are losing faith in the Fed, especially around this, letting these interest rates going up, and the market's starting to pay attention to it. You're asking, can you get above 365? I wouldn't put the likelihood as being high, but I don't know what time you're asking about. If you're saying a month, very possible. If you're saying a week, I don't think so. But I can't predict that particular price in general. All we can really say here is statistically, you would believe the market's coming back down to this level. This would be where you expect it to go to. If you get a bounce off this, then you could say, okay, there's a lot more likelihood you go to 365. Because at that point, you're seeing the confirmation. That's the trader's mindset. I don't know what's happening in here. How do we know? We set up well for a short or a bull coming into CPI, but most likely a short. We are setting up for this level down here. And then if we breach this level down here, we're setting up for a capitulation down to 340. They're the scenarios that become statistically likely. Yeah. Thank you very much, Darren. Fool in Japan says, Tom, could you take a look at Grab? Is it a legit breakout? Grab. Huh, okay. So I'm assuming it's fundamental based. Yeah, it looks more legit. Earnings in 21 days. Bullish movement. Obviously bearish for a long time. It's broken past any of these downtrends. Could still fall and then rally. But yeah, I mean, some people would scale it on that. Not a stock I think, I like that much. But volume has also been quite high around these prices. If you notice the volume, yes, the volume trades here, but the volume has remained incredibly high down here, which probably shows you funds are starting to purchase in. Just another story of an IPO gone wrong. Darn it. Don't trade IPOs, guys, unless you're in early. I need NVIDIA to pop so I can sell calls waiting on earnings. Okay, fair enough. NVIDIA bounced off its 200 DMA. Might be okay as long as they don't blow their ER. Well, their ER is going to be very important. They've got to keep holding up very good earnings results. Why not pay at the puts and drop the markets? Why drag this on so long? Gary, really? You want to ask that? Why would I drag? I want the chat to answer this one before we finish up here. Why would I want to wait, come on, man. we want the market to do this for sure. Because when you think about it, I'm a market maker. How do I make money? If I do this, do I make more money than this? Which one makes more money? Is it A or a B? This sucks in buyers, remember. This just scares the crap out of everyone and creates immense fear that no one wants to buy. We want transactions. They want to steal all your money, man. That's what they want to do. The idea of every market is to thieve from you. The concept is someone wins, someone loses, and it certainly isn't like Robin Hood over here. He's not robbing for the poor. He's robbing for the rich. So the whole point of market conditions is not to get to the price they think of straight away. It's to create and inflict the maximum amount of pain on your mental psychology while you're going through. In fact, Wyckoff's teachings tell you this. What is this? It's maximum pain. Why? Because they want to extract from the market the absolute most amount of money possible. And they do that by false breaking to a side and then going the other way. And that's what makes the markets interesting. If you're reactionary to being able to recognize the traps and the tricks, then you'll actually have better trading experience than being somebody that trades even the participation sometimes. Robbing the hood. That's right. Yeah, that's definitely a big thing here. Gary says he got stopped out. Sorry to hear that, man. I'm a little salty. I agree. That's the problem. We do get salty. AB is my name. Very good. STV Squirrel robbing the hood. That's right. So yeah, it's all about stealing from everybody and manipulating, the markets. In the mentoring that I do, I draw a little circle. And I have pie chart, like this little pie. And these are very different from this. But I'll tell you the top thing. Psychology is everything. Psychology of understanding the markets, psychology of being able to read the charts, your own psychology, confidence, all of these types of things come into it. And right now, people are being questioned on their confidence everywhere. People are hugely bearish. People are hugely bullish. And there's a lot of polarizing figures in the market. A trader needs to be relatively neutral. An investor should usually be fairly bullish. But I understand why it's difficult to be fairly bullish as well. You hear all these pundits, and right now, I mean, the bear case guys, they smell blood and they are going ham. Like I've been watching a few bear case guys. They are going ham. I know the economy is going to explode and stuff. And I'm talking about older investors. And they've all got great points. The bulls have great points and the bears have great points. I would probably say the bulls have less great points than the bears at the moment. So these guys, they're loving it. But yeah, really, psychology is everything, guys. AB says, but don't be a psycho in options plays. That's right. Why did Bitcoin companies sell off? They always do their thing. I don't know how the Bitcoin companies trade, but look, they would have traded with the rest of the crypto market going down. Speaking of crypto market, I just want to have a quick look here before we finish up. Where's this old coin sitting at? 204. Okay. At one point, maybe it'll be good. But like I always say, and I still have no idea how Kathy Wood got in over here. It makes I don't know. I would thought her team would be like, no, we don't buy this. But just remember, if it's in the IPO, it's doomed. And then in 12 to 18 months, you come back and you go, ooh, how long has it been? 14th, not 12 months yet. Yeah. IPOs in America, technology wise, bail train, or US. Yeah, it's bail train. Always bail train. I can give you so many examples. They're all hideous. Very few are good. Can we look at Tesla? We'll do in today's video. Don't worry. Hi, Thomas. PayPal double bottoming. PayPal, incredibly bad sentiment on that, and Square. Square at 100 is pretty damn good support, and PayPal, no, you don't know it's bottoming yet. A bottoming formation actually has to be some kind of turnaround. At this stage, all you've seen is just two tests of the same level. That doesn't mean bottoming, unfortunately. Yeah, there's a lot of bargains though in the markets once sentiment switches, and we will see high conviction, hyper growth stocks be stocks that perform well over the next 3 to 5 years. They're all getting much. This is a good thing for markets, even though it may not look like it. All right. Catch everybody. We will see you in the daily show. I'll make that a little bit later. And obviously subscribe to the channel if you enjoy it. Smash the like button. Click on the link if you want a free trade sheet. You can do that in there and all of that stuff. And a few people are saying oil to $100. I'm not really convinced about oil at anything at this stage. It hit this target. I trade. I don't invest in oil anymore. So for me, it's really just, we've saw a great rotation into it. It hit a price that's pretty damn phenomenal. Down here was probably more my likely price. I didn't think it would get this one until we broke through here, and that became more likely. And again, $100 plus for oil, super possible. Just need to close above this zone, and then we move to, I think it's a 103 for oil is the next big level. We'll cover that in the video. All right, thanks so much, everyone. Appreciate it. Don't panic. Have a plan. Be ready. And markets are stuck in that tighter or tightish range of about 3-4% now. And we probably should find out whether the markets want to go bear over the next week. And if you look at some of these other indicators in the past, though they are a bit skewed, I don't think these are going to load up, unfortunately. Basically, they're a bit skewed, but what they're showing is that 16th, that FOMC statement will be the big deal. So we go over here, and it is here, FOMC meeting minutes, 2 p.m. on Wednesday, the 16th of Feb. Oh, yay. What a great day, hey? I hate news, guys. It sucks. Can't we just trade with technicals and just not have to worry about news? Wouldn't that be fantastic? Luckily, a lot of the time you can. Bye for now.